First, on the payroll cost threshold, as I said, it's been rolled back to 60% from 75%. Payroll costs are defined as, and then there's this definition that hopefully you guys have seen many, many times if you're here today. You probably read this probably close to 20, 30, 40, 50, who knows how many times trying to get to know this. But you can still see it on your end. Okay. So that being said, with that 60%, now with that being rolled back to 60%, 40% can now be used towards utilities, mortgage interest, rent, things of that nature. You can now use up to 40% there. The most important update on this is when this was updated recently, a lot of people were underneath the impression this was a cliff, meaning that it was, you had to make the 60% or you couldn't get loan forgiveness at all. So that's what a cliff is, means it's all or nothing type thing. The updates and the latest changes specify specifically that it is not. So if you do not reach the full 60% of the loan using it for payroll costs, let's say you use 54%, you can still get partial loan forgiveness. And that's important to know. I think there was a lot of, for a brief period, there was a lot of kind of misunderstanding about that. But that's been clarified that it is not an all or nothing. You can get partial loan forgiveness. The time period has changed. So not for everyone, it's an opt-in too. So for those who received the loan prior to June 5th, okay, you originally signed underneath an 8-week period in which you had to exhaust the funds and meet the thresholds that were specified in your loan agreement. Now with the changes, you can opt into 24 weeks instead of 8. It's a choice, but it's one or the other for those who got the loan before June 5th. Okay, so you have the choice. If you made the 8-week, you can go ahead and fill everything out. If you met all the thresholds, if you need more time, you then can opt into the 24-week period and buy yourself some more time. Most important part, go ahead. They haven't specified exactly how they're gonna, as far as I know, it's at the discretion of the owner as to when they go in to, you don't have to get approved from the bank. Let's put it that way. When you go to fill out the loan application, you'll specify in the loan application what you did. That's the details I know so far. Again, even with the latest updates as of today, there may be more information. And as we get that information, the SBDC will pass that information out to you as well. So with regards to those who get the loan after June 5th, you don't get the choice of 8 weeks. You are actually opted into a full 24 weeks. So just bear in mind of how that kind of works. 5-year maturity date for those who received the loan, again, before June 5th, the loan term was 2 years with 1% interest. For those who received the loan after June 5th, it's now a 5-year term, 1% interest. Now, for those of you that did get it before June 5th, okay, which is a lot of people that would be here today, essentially what's going on is you can go to the bank and you can approach the bank and ask them to extend your loan to a 5-year term. And you actually have to get their approval. So the approval comes from them. The requirement though is if you do go to a 5-year term, you have to maintain 1% interest rate, and that is enforced by the department or by the Treasury Department. So that's kind of one of the big important things, that the bank can't renegotiate the interest rate. Okay, so it'll be interesting to see how banks feel about that, right? 1% interest versus if they get that money quicker and reinvest it. So we'll kind of see how that goes. Eligibility for the PPP loan. This is actually important for a significant amount of the population. Not everyone falls in this, but there are people who are running businesses that this is important to. Before June 12th, the borrow application specified that if you had a felony conviction, okay, that you could not apply for the PPP loan. That has since been rolled back. The new application that was issued as of June 12th has pulled it back to where 1 year. So if you within the last year have had a felony conviction, and I kind of have a little is defined as, and I kind of what constitutes a felony conviction there per the PPP guidelines. But if you have had that happen within the last year, you can't apply. But if it's in excess of a year, your felony conviction, you can now apply. So this isn't, I guess, huge for everyone, but there have been questions regarding this where it's been important. So how to track your expenses. I don't want to spend too much time on this, but this is really important. I see a lot of people getting really concerned about how to track this. The most important thing when it comes to tracking your expenses is just document what you're spending the money on. So Excel spreadsheet, you can use your QuickBooks or other accounting software, FreshBooks Zero, or have a physical ledger. Document what expenses are being applied towards this loan, and make sure you have the documentation, which means if it's a utility bill, make sure you have that utility bill that matches what you recorded in wherever. And as long as you have that, if there's ever a reason where you find yourself being reviewed, or there's an audit or something along those lines, you provide that documentation. That's what they're looking for at the end of the day. So there is a safe harbor in effect that essentially, to some degree, the point of the safe harbor that's been put into effect regarding 2 million is essentially for those businesses who borrowed funds in excess of 2 million, they're going to be looked at very closely. For those who didn't, there's not going to be quite as close of a look. So in other words, the SBA is not going to stretch their audit team to go look at every single loan and review all this. So that's important too. With that, we'll kind of jump into the loan application. Now, before we jump into the original loan application that existed over 4 hours, just over a few hours ago, I want to talk about the new stuff real quick and touch on it. It is fresh. So I'm just as familiar with it as the people that probably issued it to some degree. So it is very new, but I do want to take some time and talk about it. So this is the newest form that you would be probably the most unfamiliar with. It's called the 3508 EZ form, okay? And essentially, for those who qualify to fill out the EZ form, and it is a ton easier, it's like 3 pages, really 2 pages for the most part. But for those who qualify, are going to be if you're self-employed and have no employees, or did not reduce the salaries or wages of your employees by more than 25%. We're going to spend a lot of time talking about that later. And for those that did not reduce the number of hours of their employees. So that's kind of a 2-part piece. You had to not decrease wages or salaries by 25%, and you had to not reduce the hours of the employees. Okay, or there's kind of a third one. If you experienced reductions in business activity as a result of health directives related to COVID-19 and still did not reduce salaries or wages of their employees by 25%. So if you didn't do that, even though you experienced those directives or those reductions, if you will, you can fill out this form, and this form is really nice. Just to kind of really go through it, it is very simple. Let's just kind of do that so you guys can kind of see the whole thing. Go ahead. So as far as where to find that, this was emailed to me. I'm guessing this has been published on the SBA website. I don't have the link because of how fresh it is, but I'm sure that we'll be sending it out for those that will probably get the recording of this, because this is being recorded. What we'll do is when we send that out, we'll include those links. So it is very straightforward. The loan, you fill out the basic information. You got to put your SBA PPP loan number, your lender PPP loan number. You got to put in the loan amount, okay? The loan disbursement date. Now that's the date in which the funds were received by you in your bank account. The employees at the time of the loan application. So at the time you submitted the loan, what were the number? At the time you're submitting this forgiveness, what were the number? The EIDL. I see a lot of people, not a lot, I see a few people a little confused about this. This is the economic injury disaster loan that you could have went and applied for at the SBA website. You didn't go through this through a lender. You went directly to SBA, okay? So if you went on their website and you went in and you filled out the economic injury disaster loan, or the EIDL, okay, you would have been potentially granted an advance amount of up to $10,000 after you filled out that, okay? If you received those funds, you need to document how much and the application number. And if you're looking for that, you'll have to go back to the SBA website where you would have had an account set up for you when you applied, and you have to get that information there. Now, with regards to the next section, it's very straightforward. I'm going to go through this on this form, and then I probably will skip it on the next form. Go ahead. Yep. That's a great question. It would include everyone who is considered an employee or on payroll of the company. So So if the owner, go ahead. Good question. Good point. So if you're self-employed, you're just like a self-employed, you'd just be claiming yourself on that. So you put 1, which is you. And so yeah, in answer to that, yeah. Now, when you go to do the filing, if the lender says, hey, no, you need to mark that back to 0, I'd really like to know. But again, the final answer on that will actually be at the lender, whether they actually accept the application. But from what we know, you're self-employed, you would be the only employee of the company, so therefore you put 1. Okay. On that note, we were talking about pay schedule. So next is you're going to put in whether you're weekly, bi-weekly, twice a month, monthly, or other, and you would notate that underneath other. And then the cover period. Now this is where it's going to have changed depending on when you got your loan. Okay, if you're doing the 8 weeks, so let's just say we're all doing the 8 week. For the sake of kind of this example, we'll keep it underneath the 8 weeks, and I'll come back and talk about the 24 weeks towards the end of all this. So for all intents and purposes, we're going to look at this as if it was 8 weeks. For the 8 week, you're going to put in the cover period. Your start date is when you get the loan disbursement. That's the date that goes in there. And then you take it out 8 weeks. A good example is, I believe, if you get funded on, for example, April 14th, which we'll look at in hopefully an example here in a little bit. I believe if I did the math right, 8 weeks from that would put you at, I think, June 9th. So you would put that time period of those 8 weeks in there. You have the alternative payroll covered period, if applicable. Let's talk about this. So this, you would only go for an alternative payroll covered period if you'd only fill this out, one, if you wanted to opt into it, and the only way you can opt into it in part is if you run payroll more than bi-weekly, which is every other week. So that's where that comes into play. So what I mean is if payroll is more often than every other week, you can then potentially opt into this. And what this allows you to do is if your payroll, for example, is weekly, and let's say you get the loan funds 4 days before your next payroll, you can opt into the start date of your covered period being your first day that you run payroll. So you can kind of push that 4 days back when your first payroll hits, and then that starts your cover period. Does that make sense? Okay.
Do that with bi-weekly.
Can. Every other week. If you're every other week or more often than that, you can do that. You can do the alternative cover period. Now, the important part is, especially on the full application, if you don't get to do the EZ, and we'll talk about this, if you choose to do that alternate covered period, you have to keep that consistent. Okay, and we'll see as we get into some of this other stuff where that becomes important. Go ahead. It's whatever the, Scott, would you be able to help me on that one? So to answer that, essentially, yes, if you incurred payroll during that 8 week period, and let's say the actual pay date was after your 8 weeks, for that period of time that was within the 8 weeks, that particular amount would be able to apply towards the loan forgiveness, and you can include that in your calculation. Okay? Yep. Yep. Great question. So essentially, in that case, you would, again, it's the same story. So even though you use those funds, what you would be needing to do is you'd actually be needing to probably go back and change your documentation and say, hey, look, the funds that we used, and I would just change the documentation showing that actually the next payroll is what applied. So go ahead. So the most important part is that during that 8 week, all the payroll expense that you incur gets applied to the loan. If you use that to cover a prior pay period, then that's not the point. You would want to look at the next pay, and then you just adjust your documentation. Okay, so the next and final step that we'll kind of talk about that has to do with just filling stuff out is if you received PPP loans in excess of 2 million, you just simply check that box there. Okay. The rest of this form is super easy. You have your payroll costs that you're just going to put in, and the payroll costs are defined. So I'm not going to get too much into that, but you put the number there. Business mortgage interest payments, business rent and lease payments, your utility payments, you'd fill all those respectively in their lines, and then follow this simple calculation that says, hey, add those amounts of line 1, 2, 3, and 4. Then you're going to put in the PPP loan amount, the payroll cost, 60%, okay, which is you divide line 1, which is up here, you got your line 1, by 0.6. It's going to give you a number, you're going to put that in there. And then your forgiveness amount is the smallest of lines 5, 6, and 7. Okay, so you just kind of assess at that point, and that's your forgiveness amount. And then you have kind of some attestation that you'll come through here and you'll read through all this. And you'll attest each one of these lines. I won't get into too much detail, but you'll read through it and just verify that you followed, the different aspects, and you're going to initial, and then you're going to sign and date it. And there's this last piece of the form. It's optional to fill out, but you could take some time and fill that out if you wanted to. But that's the easy form, and that is a significant change from what existed before, especially for those of you who are sole proprietors or self-employed. So, okay.
This is Mickey here. Can you hear me?
Do we have a question?
Yes, this is Mickey here. Can you hear me?
Okay. Yeah, Mickey, I can kind of hear you. Go
Okay.
ahead.
Okay, great. I was wondering, I use a small part of my home as a home office. Can I take the percentage of my home, that office to the rest of my house as a percentage of my mortgage interest, my utilities, et cetera, et cetera?
Okay. So go ahead. Yes, yeah. So the question was in this particular instance, and I believe I think you put your comment in your question in the comments as well, Mickey. Did I see that? Was it
Yes,
recording your home?
that's correct. That's correct.
Okay. So I'm going to look to the comment here. Let me pull that up so I can see that, because right now I can see it right here. So, okay, here we go. So what would I do? Okay, here's Mickey's comment right here. What would I do if I use part of my home for my business? Can I take a % of my mortgage interest and utilities? You can definitely, so where you're, it's just like kind of like your tax return, right? So
Yes,
you would treat it similar to how you would for taxes.
Exactly.
So you would pretty much just match it for that period of time as you would taxes. All right, does that answer your question?
Yes, it does. Tremendous. Thanks very much.
No problem. All righty. So anyways, that takes care of the easy form. That is, hopefully the majority of you get to experience that form. The other form that we're going to dive into, now I'm going to show you guys something real quick. I'm going to put the new form and the old form, the full application. Okay, I'm going to put the full app right next to each other. Let's see here. I want you guys to see them because they are inherently the same. The new application that I received actually did not have the instructions attached to it. So first I was a little confused about what they changed, but essentially this is, the old form is on my left so over here, and this is the new form. Okay, they are pretty much the exact same. They've spruced it up, tightened it up, made it a little bit more eye-friendly, but as far as everything I've read, this is word for word, pretty much the same. Okay, so not a whole lot of changes here. For the sake of today's presentation, because this new form was issued so late, and it is a mirror image of the prior one, I have all my notes on the old form. So we'll actually kind of stick with the old form today. The only thing you'll see is cosmetic changes, which is just how things are situated in the form. We've already kind of covered this top section. This particular forgiveness amount calculation, we're going to skip to that, right? And right now we're going to skip that, and we're going to go straight to page 9 of this whole document. because page 9 is really where I feel if you have questions, you're gonna have a lot of them here. So this is the PP Schedule A worksheet. Okay, this rolls up into Schedule A, which is on page 6. Okay, and we'll get to that here in a bit, but we're going to kind of start at the bottom and work our way up. We're going to start with the worksheet, go to Schedule A, and then we'll actually go to the PPP loan calc, and that's how you want to do this. So there's 2 tables here on page 9. You have table 1 and table 2. The way, and again, if you have a newer application, it won't be page 9, but you'll be able to find the same matching page. So essentially, table 1, what they want you to do is you're going to notate all the employees who made in 2019. In 2019, all those who had 100,000 or less in wages or salary, you're going to put them in there. For those that had more than 100,000 in salary or compensation, you're going to put them down here in table 2. So that's the difference between the 2 tables. So for those that are more than 100,000, table 2. For those that are less than 100,000 or equal to, you're going to go table 1. It is pretty straightforward on the first 2 columns. Employee's name, you're going to list every single employee. If you cannot obviously attach or put every employee in, let's say you have 20 employees, you'll need to attach a schedule that's kind of mirrored this to this when you submit it for the loan forgiveness. And so you'll need to I would recommend using Excel, or if you have a Mac, you can use numbers. But you're going to list the employee name. You're going to put their employee identifier. Now that employee identifier is the last 4 of their social security number. Okay, so you're going to list that. And then you're going to list cash compensation, which is salary, wages, commission, tips, and so on. Now, if you have a payroll provider that you're working with, I'd reach out to them. Hopefully they have a report that you can use to help arrive at these numbers. But essentially, you're just going to look at what cash did you give the employee through salary and wages during that time period. And you're going to put the total amount. Go ahead. This is going to be, from my understanding, make sure I'm correct, this is going to be their gross pay. This doesn't include the employer deductions. That comes later. So in other words, any employer, I guess, what am I trying to say? Employer contributions is what I'm trying to say. So yeah, so the question was, is this the employee's gross pay before deductions, any employer contributions, things of that nature? And the answer, from what I can tell, is yes. It's going to be, and again, I'm going to keep it very simple. It's salary and wages and commissions and the tips that you give the employee on that note. Okay. So anyways, you're going to put that total amount in there for each employee down the line, and then you're going to calculate average FTE. Okay. Now, average FTE can sound really confusing at first. It's actually very, very easy when you kind of just write it out. It's your average weekly hours worked. So during this cover pay period, okay, during this cover pay period, you're going to look at each week and see what were the average hours worked for each week, okay? Or for the total week, sorry, not each week. But for the total weeks, what was the average hours worked by each employee? Now, if they're a salary employee and they're working full time, it's probably going to be 40, right? Over the course of 8 weeks. If they're hourly, maybe they work less. Maybe their average hours worked was 35. And I'll kind of show you what that looks like. But you're going to arrive at that for each employee. And to kind of give you an idea of what that would look like, if you put that in Excel, you'd have the employee name, their average hours worked over the 8-week period. Then you would simply divide it by 40. You're going to get a number. Okay, for a lot of people, hopefully that's 1. For those that are less, they're 35, you're going to round to the nearest 0.0. So in this case, I'll just kind of show you, this person was 0.88, Frankie, okay? You're going to round it to 0.9. And what you're going to do is you're going to go ahead and put those numbers respectively for each employee in that average FTE. Yep. The answer is no, because if you're self-employed with no employees, you'd be doing the EZ. You'd be filling out that EZ form. So essentially the question was, if I'm self-employed would I be doing this on the schedule? And the answer is no. With the new updated form, you'd actually go to that EZ form, and I'll sneak back to that. Let's hope if I still have it open. That's the full one. Let's see if I have it. Okay, this form right here is the form you'd use. It's less, it's not near as many pages. You don't have to do that FTE calculation at all. You just come in here, you're going to fill this out if you're self-employed. So, and this form will go out from the SBDC again with the recording of this. So you'll have that form. Awesome. Of course. Yeah. Yeah, so you're going to look at it just for the period covered by the PPP. Great question. You're just going to put in, so for this particular period, you're just going to put in the average FTE for the time in which, so for the average FTE for this particular worksheet, the question is, what goes in that average FTE? What period? For this table right here, my understanding, it's actually just the period in which the pay period coverage. So that 8 weeks, what was, yeah. Yep. Their average hours, then divided by 40. Then you'd get there. So again, to hurry and recap the question. The question was, is the average FTE, what period is that? And that's the 8-week period that you're going to kind of see here. You're going to have your funding date that starts at 4/14. The last date of that is May, I should say June. Sorry, it's just a typo there. But that should say June 9th. That would put you at 8 weeks. And boom, that's going to be the period in which you're going to calculate the FTE. Good? Okay. So next piece of this is a salary and wage reduction. And what you're trying to decide here is kind of what we talked about on the simplified form. You're going to actually have to fill this out if you had, if you reduce salaries by 25%. So if because of everything that's gone on, salaries have been reduced by 25%, that's what this whole column is committed to calculating. And it's going to calculate, okay, how does that impact your loan? Okay, your ability to get forgiven, okay? Because that was part of the deal, is you were not supposed to reduce employee pay by over 25%. When it comes to this column, the best thing to do that I recommend is put it in an Excel spreadsheet. And I got Ben and Jerry's Ice Cream 2.0 because that's what I'm going to go get after this. And there's going to be different steps. So what I listed first, I listed just the basic employee information in a row, and I put each employee in a row. And then there's about 3 steps that we could potentially go through in order to calculate, excuse me, let me jump back over here. There's going to be 3 steps you're going to have to go through to calculate this column, the salary/hourly wage reduction. And that's going to be found, you'll see right down here, it says, go to page 7. So at this point, we go up to page 7, and you have to go through all this for every single employee, okay? Instead of, writing each employee in each one of these sections, what I recommend do is just put it up on an Excel spreadsheet and follow what it asks. The first thing it asks in step 1A, enter the average annual salary or hourly wage during the cover period or alternative payroll cover period. So if you elected to do an alternative payroll cover period, like we discussed earlier, for those that have payroll more often, equal to or more often than every other week or biweekly, you would need to match what you're about to calculate here to that. So this is kind of where you got to be, just got to be careful and just pay attention. But essentially, you're going to enter in the average annual salary or hourly wage during the cover period. So I've already done all that over here on the Excel, and you'll see that in this cell I have 1A. That 1A coincides with the 1A there to kind of keep it easy for tracking purposes for the visual, okay? So I went in, I put in everyone's average annual salary and then average wage, okay, for that cover period. So we have everybody's name over here, and we have their salary. The next thing it wants you to do in 2B is it wants you to look at enter the average annual salary or hourly wage between January 1st and March 31st. So now you have to go look at that and determine what that is. Again, I just kind of filled out the numbers for this particular example. So next thing it wants you to do is it wants you to divide the value entered on 1A by 1B. So all you're going to do is you're going to look at 1A, you're going to divide it by 1B. So that divided by that kicks out a number there for you, okay? And what the next step that they're going to ask is, well, let me just read it. If 1C is 0.75 or more, okay, enter a 0 in the column above box 3. So we can see that everyone here except for Terry, I'm going to go ahead and highlight Terry red, is above 0.75. So we're going to go over to the box here on this other page. I'll just minimize it. We're going to scroll down here. We're going to put a 0 for every employee in here except for Terry. We're going to leave Terry blank. And you're going to do that for every employee that doesn't meet that specific threshold. Now, if it's 0.75, so if it's equal to that or greater, you're fine. But if it's less, that's when you have the issue. And you have to proceed to what's called step 2. And to jump into step 2, I'll put that right there. Step 2 on this form is right here. And again, I kept it all in the Excel spreadsheet so that we can kind of hopefully follow along and get a little bit of a visual. Let me pull it over here. This whole section is kind of step 2. So step 2A wants you to go and find, and we'll read it, enter the annual salary or hourly wage as of February 15, 2020. So now you have to go find that, figure out what their average salary, their average annual salary or the wage was as of February 15, 2020, okay? And you do that for Terry, and then you go do it again. 2B wants you to do it again. In this case, they want you to look at a time period. What was the average salary, you know, the average annual salary or hourly wage between February 15th and April 26th. Now you got to go calculate that. Then you're going to do a comparison, okay? If 2.B is equal to or greater than 2.A, you get to skip to step 3. Otherwise, you have to proceed to step 2.C. So in this case, 2B is less than 2A. So now you have to proceed to step 2.C. And you kind of have to just repeat the exact same thing here in 2C, which this case now it wants you to find the salary for June 30th. And again, you have to figure out what the average annual salary or the hourly wage. And then you're going to do another comparison to determine if you need to proceed to step 3 now. So as you do the comparison, and I have the comparison here, so I went and found his salary as of 6/30. And so pretty much what I'm saying is back in February 15th, Terry was getting paid $75,000. Okay. After February 15th, I dropped his salary to 55. And then it stayed 55 all the way to June. So I didn't rectify his salary. That's what's going on here. That's what they're trying to figure out. They want to know, did you rectify, did you return his wages to what they were? Okay. And if you didn't, then they're going to have you go through this whole process of calculating how that impacts your loan forgiveness. And that is, so in this particular case, again, it wants you to, if 2C is equal to or greater than 2A, well, this case, 2C is less than 2A, so now we have to go to step 3. And step 3 is, again, a bunch of calculation. Step 3 is actually a lot easier than everything leading up to this because it tells you exactly what to do. So I'm not going to spend too much time on this particular piece because once you figure out, once you've gotten to step 3, all the data you need to go through step 3 essentially is all found in these upper sections. You would have filled it out getting here. And so it literally holds your hand. It tells you to multiply, subtract, tells you which of these boxes you need to be using. And at the very end, there's 2 sections. One is for the hourly and one is for the salary. And so depending on which type of employee you're looking at, whether they're hourly or salary, you need to follow that particular section. And then at the very end, it's going to spit out a number. Okay. Whatever number you come up with. So let's say we did this for Terry. I went through this whole process and I got a number for Terry. Okay. I would then go down to this chart, find Terry, and put in whatever that number spits out of step 3. Okay. And then I would sum this whole column together and drop it in box 3. Okay. I would sum this whole column together, drop it in box 2. Same thing with box 1. And then I would repeat that whole process for everyone that had a salary that was over 100,000 for 2019. And then we're done with table 1 and table 2. So we're halfway done. Just kidding. Yep, only if they're under 0.75. So if you hit 0.75, you're fine. You know, you'll just you'll put 0 in. And that's the other part of that easy return. If you know that you didn't reduce your wages or your salaried employees by 25%, you kept them the same and you kept their hours the same, then you can go do the EZ report. That was kind of one of the pieces on the EZ report. So after we go through this, maybe I'll jump back to the EZ report and kind of recover those requirements again so that they're fresh in your mind. So after we go through this, you guys can see what the complicated one looks like. And then remember, we really don't want to be filling this out. So let's make sure we qualify for the EZ if possible. Next piece of this is the FTE reduction for Safe Harbor. What this wants you to do is this wants you to go calculate your FTE. Again, we were doing the average FTE up here. It wants you pretty much to repeat that process for these different time periods. So enter the borrower's total average FTE, sorry if I said FPE, but I meant FTE, between February 15th and April 26th of 2020. So you're gonna do that exact same process. You gotta go look at what were the average hours during the weeks for that, in between that time period, what were the average hours worked, figure out what their average weekly hour was, and then you're gonna divide it by 40, and then you're gonna sum the whole total. So kind of give you a brief look. Let's kind of switch gears slightly. Let's come back to this chart. Let's say I was filling out this chart for that particular line. Let's say I came up with all this. You don't have to go in and put each employee. You'll just put the total in this particular line. So you'll just do it, take the total, plop it in there. And then you're going to do it again for the pay period inclusive of February 15th. So whichever pay period was including the date February 15th, you have to go look at what was their average hours worked a week for that pay period. And then you're going to enter in the average FTE total there. Then it directs you on a comparison. You're going to follow the directions here. Okay, if it tells you to go to step 4, you're going to do the same thing with step 4, and you're going to look at as of June. So I interpret as of June to mean up to that point. So you're going to go take the total average hours worked each week, find out what their average hours worked for all the way up to that point, and then you're going to divide it by 40, put the total in again. And then it directs you to do a comparison. Okay, and depending on the outcome of that comparison, it tells you what to do right there. It tells you whether you got to go put a 1 on line 13, which we'll talk about here in a sec, where line 13 is. It's on Schedule A. And it'll tell you if you need to do a calculation on those lines as well. So definitely take your time, go pull the stuff, do it in an Excel spreadsheet so you can see it, and then just take the total and plop it in there. And after you get through that, you're done with the worksheets. You can now move to Schedule A. And the nice thing about Schedule A is it is a lot easier than what we've just been doing. A lot of this you just worked out. So box 1, okay, you're going to go to page 9. You're going to take box 1, 2, 3, 4, and 5. Show you where those are at. Yeah, they're these boxes that we filled in. And you're going to go ahead and put them in their respective lines right here. So one of the important things is on line 3, if you didn't reduce any of your employee hours by, let's see here, by more than 25%, in other words, you put 0 for every employee when you were doing that calculation in this column. If you put a 0 for every employee right here in this salary and hourly wage reduction column, then you would check a box in this line 3. You're going to check that box, you're going to enter a 0. However, if you did, like remember we had Terry, we had to go through and do that whole thing with Terry, you would put Terry's amount in there. because he was the only employee we had that issue with. If you had multiple Terrys, for example, that had that same issue, you would need to put the total of all those employees that the wages were reduced. Yeah, so that's what I'm looking for more guidance on with the changes here, is to how those dates change. I'm hoping that we get some more instructions. I think the more I think about it, I think that's partially why we received an updated form with no instructions, because they're updating the instructions still. So for those of us who received the updated forms today, they came without instructions. So hopefully the instruction we receive will give us, they'll have the dates changed as to what they want us to compare it to if it's a 24-week period. So the good news is if you're opting for the 24-week period, you probably have a little while before you have to go through this loan application. So if you opt for that, you probably still have time, and we'll probably get those details throughout the next little bit. For those of you that have the 8-week that want to get this done and off your plate and off your balance sheet, this is what we're trying to accomplish really today in large part.
Question for you.
Go ahead.
So, on the 8th, you ended up reducing some hours, and we are now even going on to the 24th. Which is a 24-week period.
It gives you time to potentially rectify that. Yeah, it pretty much. Yep. Again, go ahead. Mhm. Gotcha. Great question. So what you'll, the answer is by the calculation inherently, yes, because remember when we were doing that FTE calculation, you were taking the sum of all your employees. So if you have employees that have dropped to, like, let's say 0.5, but you brought on another employee that's doing 0.5, well, that would equal 1, right? So it's all in that total summing of the calculation. If you had brought in more employees to kind of, you know, fulfill that gap, then yes. And to rephrase to put that question out on here so everyone can hear it, just to be sure, the question was, if I had employees that cut back their own hours and we had to bring on more employees during this period to fill the gap of the lack of employees, would that all be kind of trued up in these calculations? Would that be recognized, and would I not get penalized for that? And that the answer to that in short is yes. And that's what we're just talking about now, which is if you had an employee that reduced their time on their FTE calculation to 0.5, but you brought another employee that was doing 0.5, that would equal 1. So when that gets retotaled and you're looking at the total sum, it would kind of just net out. So good question though.
So filling out the application.
Yep.
February.
Mm-hmm.
At that time, we had 9 that were terminated. So now we're down to 7. When we, and then this all broken out.
Mm-hmm.
So now we've got 7. So what do they do? How do they?
Great question. I'm glad you brought that up, because that actually shows maybe a slight gap in maybe what I was explaining a little bit earlier. So thank you for that. So for those employees that were terminated with cause, you would actually put their FTE calculation in here. You would actually show that, and that's what this FTE reduction exception is. And so what you would need to show, so I forgot about this particular line item when I was explaining this, but for employees who you terminate, so what we're asking here is for employees that get terminated, that with cause, right? Or an employee who, for example, we furloughed or let go, but then offered them to come back and we have it documented and they refused. For those exceptions that happen, you're going to document those right here. And all you have to do is you're going to just put in their FTE right there in that particular box. Yeah, in fact, yep. And so like for this particular example, I actually had put these in here, but I'd hidden it. That's why I didn't quite catch it. So I have 2 actually terminated employees in this example here. So what you'd do is you would do their FTE, calculation, and, I would assume that, maybe their reductions actually substantially, I mean, their numbers could be substantially smaller. I'm showing 40 and 35, just for an example, right? But let's say that it was like 15 and 8, you would then do the regular calculation and document them as a line, as terminated employees, and you would simply just put if there's more than one, essentially, my understanding is you would need to probably create an Excel spreadsheet and attach it to this form and show each employee they were terminated, here's their FTE, and you would actually use that as a part of your box 2 calculation. So essentially what you're going to do is you're going to put them in this column, right? And you're going to sum them into box 2, and you don't do any, you add them into box 2. You don't have to take them out. You don't have to do anything with them. You're just going to add them into box 2's total, and then what they would go into line 2 up here, okay, where it asks for box 2. So thank you for bringing that up. So that is what you do with terminated, and for those that don't return, even if you offer them an offer. The big thing that was really emphasized, though, that I just want to re-emphasize is documentation on that. That's a big thing, okay? Okay, so where were we at? I think we just finished kind of putting in the different boxes. So you're going to put in all the boxes. Box 4, you're going to go there. Line 5, pretty straightforward there. And then this is where you include all the employer contributions, okay, that we talked about earlier. So Bob had a question, what's all included down here below in cash, in this cash, compensation column, and he was asking what's included. And it's really just the salary, wages, and tips and things of that nature. Where you recognize if you provide health insurance, retirement plan benefits, if the employer is contributing in behalf of an employee for those items, you then put the totals in there, okay? So that's pretty straightforward with regards to that. Line 9 this is where you track the payment to those that are self-employed or to the owners. And so going over to the Excel, you'll notice that Ben and Jerry, in this particular example, this shows Ben and Jerry, but over here on this Excel, on this particular sheet, I show Ben and Jerry broken out. And the reason why is because they're owners. And so you actually track the owners separate in the payments made to them. And I got the payments made to them during that pay period, and you'll see that matches what we did up here. So break them out because you add them in on line 9. Okay. So and that actually gets a ton simpler because of the easy form that's now been produced. But on line 10, again, it's simple math. You're going to add lines 1, 4, 6, 7, 8, and 9. So you come up here, add those lines, get a number, you're going to put it in. And then this is where you'll recall we did the FTE, full-time equivalent, which is the reduction, the FTE reduction safe harbor. We went through all this. Depending on how you answered this, it actually tells you what to do with lines 11, 12, and 13. And so if you, for example, on lines 11, 12, and 13, if you went through that exercise and it said, hey, look, you've met the safe harbor, you can just put a 1 in line 13 and you're done. Boom, that's all you do. And you check this box here. So if you go through that FTE calculation, everything checks out and you're good, all you do is just drop a 1 and you're done. However, if you're like the example we had with Terry, where Terry, or I guess if you have a different outcome, it tells you exactly what to do if you reduce employee hours. And so what it wants you to do is, let's start with this. So if you get off scot-free, you'll put a 1 in line 13 if you have no problems. But if down there in the FTE reduction safe harbor, it tells you, hey, you need to divide line 12 by line 11. Now you have to go through another whole FTE calculation. And you actually get to choose your period. And I do have a note here. So if you do have to divide line 12 by 11, if you have to go through this exercise, how you come up with line 11, which is your average FTE during the borrower's chosen preference, you now get to choose what you're going to calculate your FTE as. Not exactly ideal on how they set that up, but essentially you have one of two options if you're a year-round employer. Okay, if you're not seasonal. You have option 1, February 15th to June 30th of 2019. This is all 2019. You can go calculate your average FTE during that time period. Or you can do option 2, which is January 1st to February 29th, and go calculate your average FTE during that time period. You can take either one. So you kind of go calculate them both, see which one kind of benefits you the best. And that's what you're going to choose to put in this particular line. If you're seasonal, so if you do like lawn care, you have a choice. You can use either of those two periods, or you can go for any 12-week consecutive period between May 1st and September 15th. All right. So there's, you know, this particular piece is not as friendly, but again, it's very basic in the sense that you're just going and doing that basic FTE calculation for that time period. But you do have to kind of think and analyze, and ultimately, you're going to fill that out and you're going to follow the steps. You're going to get a particular outcome for line 13, and then you're done. So that gets you through Schedule A. And so once you're done with Schedule A, you can now actually finally get to the loan calculation, which is up here. So this particular piece is fairly nice. I can tell you that much. This is nothing compared to what we've been doing. You're going to go ahead and take line 10 from Schedule A. So you come down to Schedule A, you're going to steal line 10 from here. You're going to sneak all the way back up here to the actual, drop it in there. Now you actually get to put in your mortgage interest payment, rent or lease payments, utility payments. You'll notice that's very similar to what we were seeing on the EZ form. You put all those in, and then you follow it, and you get to line 5. And really, I wouldn't get too caught up on this definition. I would read this. And it says, enter the amount from the PPP schedule on line 3. So just enter line 3 right there. And then add 1, 2, 3, and 4 and subtract line 5. So you add all these up, subtract the 5th line, boom, you're going to get a number. Okay, now you have what's called your FTE reduction quotient, which again, I wouldn't be too concerned about what that means. It tells you what to do. You're going to go take line 13, you're going to put it right there. Multiply lines 6 and 7, put that number there, put your PP loan amount there, payroll costs. Again, just follow this particular step. Divide line 1 by 0.75. Line 1 divided by 0.75. The last piece of this is forgiveness amount. Enter the smallest of lines 8, 9, and 10. So pick one of the 3, put it in there. Done, right? Easy. Again, you only have to go through this whole exercise. This exercise really only gets really brutal if you reduced your employees' wages by 25% and you change how much they could work. So if you didn't do any of that, you get away with the easy. Go ahead, Bob.
On this potential line 1, of course, nine is your actual loan amount, but number 10, so then you
Correct.
So you only get 60%.
Correct. So on the latest form, and I'm glad you mentioned that, Bob, the form that we're looking at is the form before the change of the 75%. So there is one line item that does change, and it's that, and it would be 0.6. So this,
you would get the full amount. I thought that my understanding of the platform was that it was for your payroll protection, but they will have some for your rents and overhead, but primarily for your payroll. Well, with that in mind, you think, well, if we get all payroll, 100% payroll, then it would be probably better. That's kind of where we gauged our loan request amount was based off our payroll for 8 weeks.
so
This year tells me that the lowest numbers to me is going to be 7.
So what you got to do is you still got to go through the full calculation process. Once you, so let me put Bob's question to the front of everyone. So Bob's question is, okay, hey, look, I used 100% of my loan proceeds to cover this, to cover all for payroll costs. It all went to payroll costs. So say I got 10,000 in loan proceeds. I took the whole 10,000, it covered payroll for my 8 weeks, all of it, okay? I didn't use 40% for utilities. I used the whole amount for payroll. Bob, when you go to do the calculation, and you're accounting for the total compensation paid to employees in this particular scenario, all that kind of comes full circle in the overall calculation. So you would be actually, because you used 100% of your funds, your payroll, as you're putting in the total amount of compensation, would be bigger than if you'd used 60%. Does that make sense? So you're bolstered down in these lower pages. Your numbers are bigger. They're at 100%. And so when it all comes full circle and you get to that top page where we're doing the calculation up here, it will come full circle and it'll show that you used your loan for the full payroll. It all went to payroll, because you'll have 0 on mortgage interest, you'll have 0 on lease, you'll have utilities, but your payroll will be the big one. And so when all that comes into play, and then you go to do this calculation at the bottom, you'll be fine.
Well, we're labor heavy.
Mm-hmm.
Crews, very small compared to heavy labor and all the workers' comp and all that stuff.
And a good question to ask yourself is, did I reduce my employees' wages by more than 25%? Did I change their hours? And if the answer is no, you ain't have to go through this form. You get to go to the easy form. So that's the biggest thing to keep in mind with the latest update as of this morning. And let's go back to that. Let's just take a second and go back to that, the EZ, okay, and talk about this. Okay. Go.
So to be clear,
yeah.
If you use all of your PPP payroll, you don't have to worry about other expenses.
You shouldn't, no, because you're going to show that, hey, that loan went to all the payroll. That's what it was supposed to be used for. Because this was like this is like you had a threshold you had to meet.
You had to use it.
Exactly. At least 60%. So the question is just in case the recording didn't quite catch it, is if I use it all for payroll, I'm going to get it all back. And the answer is yes. The 60%, and I know we were talking 75% when we were looking at that old form, and I apologize. But the 60% threshold that's been updated, okay, you have to use for payroll costs, it's just a threshold. That's the minimum you need to meet to be able to qualify for full loan forgiveness. But if you use the whole loan for payroll, the whole loan can be forgiven.
And applies.
Same applies if you're self-employed. Yeah. Okay, next thing. Last thing I want to cover, if you're self-employed and have no employees, you're doing the EZ form, okay? If you did not reduce salaries and wages of your employees by more than 25% and did not reduce the hours of the employees, okay, you can do the EZ form. And then there's that third one, which if you experience reduction in business activity as a result of health directives related to COVID-19 and did not reduce the salaries or wages of the employees more than 25%. Notice how it doesn't say anything about hours. It doesn't say anything about hours in that third one. That's the difference. If you did not reduce their salaries or wages by 25%, you can do the EZ form. Hopefully a lot of you will be able to do the EZ form. But for the off chance that you don't, we went through the very complicated, well, not the worst complicated, but a very complicated nonetheless paper. What other questions?
So what happens if you just decide that this, want to do any of it?
And you want to pay 1% interest?
Well, so
Yeah.
you decide to do it. What if you just don't pay anything?
That's between you and the lender. That's between you and the lender. So the question was, hey, what if I just decide not to do anything and not even pay this thing? Well, I think if I recall, you have 6 months before you got to start making a payment that you can defer. I think there's a second deferral on top of that that you can actually do, as long as you do as long as you actually apply for forgiveness. But But if you don't pay the loan, then the lender will come after you in whichever way they want.
My
So
understanding was it wasn't tied to any collateral, it was a personal guarantee.
it's backed by the SBA. It's backed by the SBA. So where it's backed by the SBA, where it's backed by the SBA, it'll probably be the SBA also involved.
This is probably don't get this loan.
I guess not. So, anyways, do we have any more questions from the group? Okay. So hopefully you guys can do all the easy. Again, hopefully you spend most of your time there, but for those that don't, good luck. Always reach out with questions. We'll be able to answer them one at a time and we'll get you answers. So thanks.
Yeah, do you have okay. So Taylor, one of the questions that did come up is, can you provide the Excel spreadsheet that you were showing everybody? Is that possible?
Yeah, so that's a great. There for use, but that was a good request. I figured that would probably come. I'll spruce that up a little bit. And maybe I'll do an instructional video to go with it. That I'll provide the SBDC and then they can provide to everyone who's on the day.
Okay, hopefully that answered the question about the Excel spreadsheet that will be provided. Taylor, again, thank you, Taylor, for being here and doing all this and spending the time. I know it's been a revolving door with the changes and stuff. So again, we want to thank FJ and Associates, Scott and Taylor, for being here. Some of you are probably looking at this going, no way. This is just too complicated. If you get the feeling like that's the case, just keep in mind that Scott, they actually help people walk through this process. There is a fee involved in doing that, but if you feel like that is something that would make better sense to you, then you can reach out to FJ and Associates, and they will also be able to kind of walk you through and get that all done. Because for many business owners, it's just a foreign language, and we understand that. So we just want to thank the Davis Tech, the SBA for the funding that they give to the SBDC, allowing us to do these kind of events and to be able to help with free business consulting for new and existing businesses. Andrew Willis is the director here at the SBDC. You can pretty much find an SBDC by going to utahsbdc.org. Andrew, I think, is the address on that. But keep in mind that if there's some needs to help set up a business entity or some business consulting, contact the SBDC. Again, the Business Resource Center here that helps facilitate places for people to have offices and conference rooms and things like that right here in Kaysville. And any other questions, last minute comments, questions? Scott, anything? And Taylor will send out the contact information for FJ and Associates. This will be a recording. We missed the first part of it. Sorry about that. Introduction to who is actually doing this, but Taylor Bennett with FJ and Associates. And so thanks for joining in, and watch for the recording of this. And if you have any questions, reach out to the SBDC.